Hello there, my name is Thomas O'Regan. I'm a professional property investor here in Australia. Me and my wife, over the last 4 years, have grown our property equity position by 20%. What the hell am I saying? 20 times. 20 times, not 20%. 20 times is a lot more than 20%. Now, let's get into today's topic. Let's talk about reading markets on a national level. Now, people think you can't compare markets interstate with each other, but I would argue that point very strongly. Now, when I first found the market that I first invested in, that was an emerging market, which was actually the third property I ever bought. The first two were not in an emerging market. The first two were in the midpoint of a down or a flat market. But let's not talk about that. Let's just talk about emerging markets. So the way I actually discovered this emerging market was I was looking for properties under a certain price point of a certain type. Or actually, I wasn't really looking for properties of a certain type. I was just looking for properties under a certain price point. And I think maybe the price point was $200,000 or something around that. And I filtered all the properties in Australia and found all the properties that were under $200,000. I found a few in Queensland, but I found a whole lot more in Perth. And I started asking myself, why are these properties in Perth so cheap? I just keep looking after property after property. The apartments were probably like a quarter of the price of Sydney prices. When I say the apartments, I mean the apartments that were comparable. And when I say comparable, I mean, for example, if you're buying an apartment that is within 5 k's of the CBD in affluent areas, for example, looking in Perth versus affluent areas looking in Melbourne, 5 k's from the CBD, or affluent areas in Sydney, 5 k's from the CBD. Also, the apartments had to be the same size and all the other things, right? But the apartments that were comparable from state to state, it was looking like the apartments in Perth were about half the price of Melbourne apartments, and a quarter of the price of Sydney apartments, and then probably like half the price of Brisbane apartments again. Now I thought it doesn't make any. I know that Perth's population is far smaller than the other states, but I think today, or at the time, it was 2022, it didn't make any sense for me for an apartment to be any cheaper than 200 grand, and it didn't make any sense for a house of that for a house to be 200 grand, because I was finding houses in Perth in let's call them low socioeconomic areas or ghettos, whatever you want to say, that were about $200,000. And if you look at a house that's $200,000 that was like this one in Perth, about 30 k's from the CBD, if you compare that to Sydney, you're paying, I think, at the time, maybe about $1 million in Sydney to buy something like that. But in Perth, it was 200 grand. So it was like a 5 times, 2, 4, 6, 8, 10. It was like wow. It was like a 5 times difference. So that was pretty crazy. And I just thought, it really doesn't make any sense that these properties are that cheap. This is a capital city. There is still a large population here. And then I started looking deeper into what is going on in this Perth market. Now, I'm from Sydney. The market's pretty much going up in Sydney historically, or it's just having a little bit of a flat. It doesn't do what Perth does. What does Perth do? Perth, historically, the market goes up very quickly for a short period of time, or short being maybe 5-7 years. Okay, and then it goes down very quickly, very far. So that's how Perth market worked. Now, I also saw these properties. So what happened in the Perth market? There was a mining boom from 2006, I think it was, from memory, to about 2014. Now, what did that mean? It means prices from 2006 were a little bit lower before the boom, were a little bit lower comparatively to Sydney properties and Melbourne properties. But then in the boom from 2006 to 2014, properties in Perth, comparable properties in Perth actually were more expensive than Sydney or Melbourne properties. Now, I think if you're comparing Perth to Sydney or Perth to Melbourne, if a comparable property is more expensive than those two states, I think it's overpriced. Just know that, okay? Now, what happened after 2014? The mining industry boom stopped, okay? That was producing these high-paying jobs. These high-paying jobs were the people that were buying all these properties and pushing up the prices. The mining stopped. What happened to the prices from 2014 to 2022? They almost went all the way down to, I think, 2006 prices. So in 2022, you could almost buy a house at the same price that people were buying houses for in 2006. That's crazy. And I thought, that is great. That is great value. You know, that is amazing value. There's only one way for these properties to go, and that's up. And they've been, the property market's been in a slump, and I could see it gone down quite quickly, and then it was starting to stabilize. And I could just see that from the data, from looking at property after property after property, starting to stabilize. And I said, this is a great investment. I'm buying this thing for below replacement cost, and if you know how to invest, you'll understand that most investments that you buy below replacement costs are a good investment from that viewpoint alone. Now, what happened with those properties from 2022? Now, I didn't know it was going to go up as quickly as it did, as quickly as far as it did, or as quickly as it did. All I knew was buying good value properties, that had a lot of potential. Those properties I was buying for I bought, and this is where I changed my view from house, it needs to be a house, to I'm investing in apartments, and it was a cash flow thing. But I changed my view from houses to, I changed my view from houses to apartments at that point because of cash flow and because of what I was getting from advice, contrary to my own personal beliefs and opinion. I went with the advice from the professional that I was consulting with at the time. His name is Nathan Birch, by the way. He has a huge 100 property plus portfolio, so he knows what he's doing. Bought these properties, and within 3 months they'd grown about 40,000, and within 3 years they'd doubled, and some of them had tripled. Okay, we bought a lot of apartments in that time, and one of the big reasons we went into the apartments, I don't know if I knew it at the time, was because the cash flow's better. Okay, and since then I've taken that same investment view and experience and tried to replicate it in other markets. And there's not too many markets that big in Australia because we only have a small amount of states. But those foundational principles are showing themselves again there in Melbourne. That's why I'm going very heavily in Melbourne right now. Now, that's how I basically read markets. Okay, so properties that I've been looking at Melbourne for about a year now. Properties that we were purchasing for 280 there 6 months ago are now selling for 350. Now, if you're the type of investor that likes to buy houses for $500 or $600 or $700 or $800,000, let me tell you, a property that you're buying for 280 and it goes to 350, from a percentage point of view of growth, that is obviously far better than a house going from 800 to 900. Okay, so yes, if you're buying a house, 100 grand growth sounds great, but actually, can you see how you could probably buy 3 $280,000 properties, and if they all went up by $70,000, $80,000, 3 properties going up by $70,000, $80,000 is better than 1 property going up by $100,000, which is what a lot of people miss. As well as that, if you have 3 properties, and I'm talking about apartments versus houses here, if you have 3 properties that have higher cash flow, because apartments generally do have higher cash flow, then isn't that a better position in terms of cash flow to be in? I would say yes. Okay, so that's how I invest, and good luck trying to find the next property market that's going to boom. Look into the historical data of properties, and hopefully you find a nugget. Thanks guys, bye bye.